Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Friday. It is January the 6th, 2012, and like we do every Friday, we're going to be going over every single market that we track so that you know what I know heading into the week ahead. This is really important. If you watch any video, watch this one. This is, like I said, important, but we're going to have different signals on different charts, so let me kind of give you a summary at the end of this. We're going to start off looking at Australia's markets, the AORD, and you will notice here that we have a series of higher lows in form here, and we've taken out this high with this high, and we've pulled back a little bit. This is still a bullish possible reversal to the upside here as long as she respects this low point right here. Okay, so that's what I'm watching with this particular chart. Is I'm still bullish on this chart. Still looks real strong to me. I wouldn't be selling this at this particular time. Okay. All right, let's have a look here at the Dow Jones Industrial Average, one of the U.S. markets that we'll be looking at today. This one I'm actually not bullish on at the moment. It's made its nice move. It's that's fine. I'm not shorted at the moment either, but there's some telltale signs here that I don't want to be bullish this particular chart. Here's the number one thing that I'm seeing right off the bat. You got this low point here, this low point here. We draw a little trend line right there. It looks bullish. However, draw a trend line off the highs here, and you're going to find yourself looking at a rising wedge pattern or a bearish reversal more to the point. It's basically not a good pattern to be a bull in. You can trade in this particular range for a while, and that channel I can do that and continue up with an upward bias. However, they don't end well, so that's something that I see there and that I'm not a big fan of. Also, you'll notice that we have this high point here and a corresponding high point showing an uptrend like this. However, the corresponding highs on the ultimate oscillator here and current, well, let's see, way back here somewhere, is actually down. So that's a bearish divergence, which is another sell sign. That's, like I said, I'm just not seeing anything here that I'm really bullish on. I'm seeing actually warning signs that there's an impending breakdown coming, but it doesn't have to happen right now. I'm not bearish at the moment, not to the point of shorting or anything of that nature. So just keep that in mind, okay? I don't see anything positive or bullish that I want to focus on with the Dow Jones right now. All right, let's take a quick look here at the CAC, the French markets, and you will note it was, I think on this day I told you that you had reached this target, which is, the bullish trader's target. We would find that already met at that point. We were also running up into the overbought condition on the ultimate oscillator. I told you that even though they are overbought, they don't have to turn immediately right then, so they could, if you wanted to stay with it, you could. However, I told you to keep a stop off of this low, because if she started making lower lows on the candlesticks, then you don't want to be involved anymore. Well, that's exactly what happened. The very next day, you made a new low. It should have been the end of any bullish strategy there. You should have been exiting completely on that move, and now we've pressed down for a couple of days. However, this is still a bullish chart. I mean, you've got higher highs and higher lows, so the pullback here, it's not like massive selling, sell. I mean, it may develop into that. We don't know what kind of news we'll get later, but right now there's nothing major on the sell side here. It's just a little pullback. Keep an eye on it. You may get an opportunity to go long again and see more upside potential. We don't know at the moment. Right now, we just sit here watching and wait to see what kind of a reversal signal we get if we get something like that. All right. If you are shorting it based on this particular signal that you would have noted, had you been shorting here, your stop should be here. That's where you would be entering your stop at, so that if she does get a reversal, you can get out and not be losing any money. But when she starts moving, if she moves a little bit lower down to the middle Bollinger Band line, you may want to advance your stop to lock in a little bit of gain. If she keeps going lower, keep advancing that stop. Right now, I'm not bullish or bearish this particular chart at the moment, okay? Quick little look here at Germany, looking at the DAX, and you'll notice that basically the same chart pattern formed here as we saw on the French markets. This one, though, it's basically the same thing as the one I just shown you. This pullback here could have been visualized, could have been seen by the takeout of the previous low. Told you the same thing. You had advanced up to the overbought condition. You could see reversal at that time, so to advance your stop to those lows. If you get taken out, then just stay out. And that's exactly what happened. Now, if you're shorting, your stop should be right here. But the overall chart pattern doesn't really, to me, scream short, 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 sell, sell, sell. To me, it's more of a bullish pattern with just a little bit of a pullback before we test the highs again. There are a couple of different ways to spot this. Number one, it's a bullish overall pattern. You've got this little cup with handle formation going on right here, doing a little dance, pulling back, making the handle. There's nothing bearish about that. Also, you'll notice, let me clean this up. You'll notice right here, when you had rallied up back in this time period, what candlestick formations were you seeing? Shooting stars, sell signals. That makes sense. That's telling you there's some resistance here, and then down she goes, right? You reverse back to the upside here. What candlestick formations you get this time? You don't get the same candlestick formations. There's that resistance line. It's not really there anymore. At least it's not as strong as it was. So there's going to be an attempt, I think, at take out this high again. So that's why I'm not really bearish on it and trying to sell it right now. But it's some people will. So whatever floats your boat. But that's just something you should learn to take note of, which is what patterns are you seeing at the tops and what patterns are you seeing at the bottoms. All right. Okay, let's have a quick little look here at gold. And like I mentioned last week, this is an overall downtrend. This is the move you've got going on: lower highs, lower lows. That's a downtrend. We did get a reversal signal here. You had a hammer formation showing the bottom a few days ago. Nice bounce up here, but like I told you back then, this is still just a counter trend rally. The overall trend remains to be down, and until that changes by taking out a high, we can't get extremely bullish on this particular chart. Okay, you did have, and I looked at actually, you did have a bullish divergence here. You had this trending up while corresponding low points were trending down. That would have called for a bounce to the upside along with that hammer candlestick formation that you had there. That's all fine and dandy. And if those of you guys who did trade it, if you keep taking your stop, let's say maybe, let me clean that chart up. Let's say maybe that you were using the hammer candlestick trading strategy right off this guy right here, which meant you set your stop right here. You bought anything in this channel right here. You were willing to buy right there. Let's say you did that, and you're making money. You're happy. Take your stop loss limit and advance it along the way. See these low points here? Low point here, lower, higher low here, higher low here, higher low, higher low. As long as that continues to be the case, hey, more power to you, make more money. But when that stops being the case, I would just exit. You don't have a strong enough chart here to warrant buy and hold and close your eyes and sing songs. It's just not a really great strategy with this particular chart. Now maybe you'll have a breakout here, and then we'll have an uptrend potentially beginning, but you would still have to have a reversal, a pullback to create a series of higher lows, which then would confirm that uptrend. But right now we're well too early. I can't even talk. We are far too early in this particular move here to be calling this the exact bottom or anything of that nature. Okay. Okay, I've had a problem with the Hong Kong Hang Seng Index chart at stockcharts.com all week long. Every time I try to pull it up, I get this funky candlestick formation, which totally messes up my whole chart. So I can't really give you much of an analysis. I could wait till 5 o'clock when the chart fixes itself. That tends to be what's happened all week long. But I don't want to wait that long to make this video. And there's nothing really here on this chart that's of importance. It's a bearish chart. It's been in a downtrend. I'm not bullish Hong Kong Hang Seng. I just sit back and wait. I don't see an opportunity long or short in this particular chart. I don't see it from a short perspective because we're not seeing an overbought condition currently. So I don't see that as a great shorting opportunity. For now, just find better charts to trade. Okay, a quick look here at the India Bombay Stock Exchange, or the BSE. We told you this little move that you had going on right here is still counter trend. The overall move was lower. That's why it's going lower. And this trend right here is nothing to concern yourself with. You had a little pullback, and then you're seeing a series of potential or actual higher lows. And some people may be getting really bullish on that. I told you, back then a couple days ago, it's not anything to get all that stoked about, because right now you can see this move up to the following day actually is just set back and respected that resistance line right there. Nobody's crossing the line. And as long as nobody crosses the line, you don't really have an uptrend here. You have something that looks like it would like to be an uptrend, but it's really not. So for now, just keep an eye on it. But typically what you'll have, let me clean that chart up. Typically what you've got in a downtrend is you'll have situations where price activity will go into some kind of a sideways moving pattern. In this particular case, you've got this move to the downside. You've got this little pattern here. Okay, that's just a little flag pattern going on. or you did call it different things, but it's not bullish. And if that breaks to the downside, it's basically just going to be a continuation of the previous trend, which is to the downside more. Okay, so nothing bullish there. I wouldn't mess with it. Okay, the Japan iShares EWJ. And this one we started to see some signs of light. You know, we had this advance going on that we had going on back here. Broke down, fell around. All right, came up here, and what did we find? Resistance at the previous level. Pulled back off. We did get a series of higher lows, so it was showing some signs of hope here. Nice move back to the top. What did we find? Resistance again. And now we're selling off again after overbought condition. Yeah, I would make sense to me. I would leave it alone from the bullish perspective. I wouldn't be all that bearish on it either. I mean, just not at the moment. I find better charts to be bearish on when the time comes. But right now, I'm just not all that, bullish or bearish on this chart. It's just moving sideways to me. Overall pattern, at least, is just moving sideways, and that's nothing really that I want to get involved in. Okay, now we'll be looking at the FTSE London Financial Times Index. This one, much like our story with France and Germany, you are in a strong uptrend here. Really nice opportunity for everybody. A higher series of lows going on for a prolonged period of time. I told you just keep advancing your stop to those low points until you get taken out. Okay, and back here would have been your target. You hit that, and you can stay with it whenever that happens, but just keep advancing your stop until you get stopped out, which you guys stopped at the following day. So that's the end of that. There's nothing else to do with this at the moment. However, I do see it as the same kind of a situation I was talking about earlier with the Germany's market. You back here, you had advanced. You came up here, you started getting the shooting star signals, those showing some resistance at that particular level here, and she pulled away from that. In this particular case, you advance, you break through it. There's no sell signal as far as the candlestick formation goes. Now you've pulled back to previous resistance, which is now acting as support. That's why I would not, repeat, would not short here. It may develop over time, but I think, in fact, you're going to test this previous high again shortly. So I keep an eye on that. You also do have a situation here which currently is looking like a little bit of a bearish engulfing. I'm sorry, I've got all the wrong terminology. So you got the bearish divergence forming here, slightly higher on the ultimate oscillator here than you are here. This is sloping down ever so slightly. And this corresponding high period here and here is sloping up. So that's a bearish divergence telling you you're coming up to a sell point, but we're not there yet. Bearish divergences take time. Or divergences of any type take time to develop, so let them develop. Don't just get all bearish really quick on me, okay? Quick look here at the NASDAQ. It's actually a bullish chart. It's been a sixth sister, been lagging the others, but she is a bullish chart. We do have a situation here where you had a low point, it trends up to the high point, pulls back down, makes a higher low, and then makes a higher high from the closes. So this is actually a bullish chart. You are ever so slightly getting up there above that overbought condition at 71, which typically is 70s overbought, but you can stay up that way for a while. Like here, you stay up there for a while. Okay, so just because it gets up there doesn't mean it has to reverse immediately. For those of you who are long, what you can do is take your stop loss limit and just trail the low points. If you just keep advancing your stop along the lows, that would keep you in for a little bit longer before she reverses at some point. Right now, from a bullish perspective, my trading strategy, I would have been buyer here. That would have been my target. It's already over for me. I'd be sitting out waiting for something to develop. Okay. All right. Oil chart here is actually quite bearish. Not quite bearish, but it's not bullish, and it's got some sell signals on it. So we do have a series of higher highs and higher lows in play here. Then we got some sell signals in play, and we've got a bearish divergence here and here. So you'll notice that you've got this sloping down, corresponding high points are sloping up. This tells you that this is unsustainable. It's not supported by momentum, and it's starting to break down to the downside. So that makes sense to me. I just be leery of trading this to the downside because of the headline risk. If Iran wanted to screw with people and shut down the oil pipeline, so to speak, it would cause problems if they would shut down the strait. Okay. The Russell Small Cap Index, Russell 2000 Small Cap Index, has actually not done anything this entire week. We've just been basically moving sideways all week long. Keep an eye on it. I think you'll end up breaking out to the upside a little bit before it's all said and done. But keep an eye on it, okay? What you had here is this uptrend going on here, corresponding line here, find resistance there. This uptrend is showing buy pressure is increasing as we go on. So at some point in time, we expect that to evolve into a breakout to the upside. That's what that chart pattern actually calls for. So now you know. The S&P 500, the SPX, you've got the same situation going on right here that I just showed you on the Russell. And then in this particular one, you've actually already broke out as you had here. And we're finding some support right here at this previous resistance line. And that's what's going on here. I actually expect this to make a move to the upside next week and continue to test this previous high over here. You'll notice you've also got a high point here and currently a lower high. This could evolve, but right now we're looking at the formation of a bearish divergence, but it's still too early. Bearish divergences can form, take time to form, and so forth and so on. So we see this currently bullish chart that still has some upside to it, but we also see a potential developing for a peak or topping pattern going on. So let's keep an eye on it, but right now it is still bullish. I would take my stop loss limit that was right here and advance it to this low right here and just continue to monitor. As I said yesterday, I am actually still long the SPY. Alright, the silver chart is a weaker version of the gold chart. You basically have a downtrend going on. It's been that way for a while, and you're going to continue that particular pattern because she can't apparently break out of previous highs. She can't make new highs. Therefore, the buy pressure is too weak while the sell pressure is too strong, and you will continue to move lower as long as that is the case. You'll also notice in this particular chart here, you did not have the bullish divergence that we had on gold charts. So here, you were trending down. Corresponding lows were also trending down. This was confirming actually the sell-off. You did get oversold below the 30 line there on the ultimate oscillator, which would, to see a hammer candlestick formation here and a reversal bounce makes sense. But like I said, back when this was forming, it's just a counter trend bounce. If you can trade them, but know that they're weaker, you don't look at these situations and say, okay, I'm going to buy here and I'm going to sell at the previous whatever. You don't want to get all bullish on it. Just trade the little thing, and as soon as she starts making lower series of lows and lower series of highs on your candlestick formations here and here compared to here and here, then be done with the trade. Walk away. Okay, looking at Canada's chart, this has the TSX. We have had a big move to the upside, and it's actually got enough volatility in the mix, meaning there's enough price difference between the lows and the highs, which it's a bullish pattern. However, you ran way up here, got yourself a bearish engulfing candlestick formation here, while way up there in the overbought condition of the ultimate oscillator. Yeah, I'm not a buyer of this at this particular point, this level. In fact, I would be out of this trade if I were long this particular average, and I would, if I were still long, I would be keeping a real tight stop on that sucker. Keep an eye on it because it's pretty logical to find a pullback here. I would think you've got plenty of reason to see one. Okay, so I would keep an eye on it. If you get a little more room to the upside, great, but I don't see any real money there at this particular time and place. Okay, it's just too much risk on the table to be a buyer here. Last but not least, we have the VIX, the volatility index, which runs the opposite of the S&P 500. So when the S&P 500 is up, you should see the VIX down, and when you see the VIX down, you should see the S&P up, and vice versa. Also, when the VIX is up, the S&P should be down. In this particular case, though, if you'll notice, you had the S&P 500 close down on Friday, but so did the VIX. What does that tell you? Well, it tells you one of them is lying to you. And honestly, the overall trend, like I talked about before, is down, and therefore the actual one that's telling the truth here is the VIX. The VIX is selling off. That makes sense. It's in a downtrend. That should be the case. However, the S&P 500 didn't get a lot of buying activity ahead of the weekend. That's pretty common. Actually, it happened last Friday, if I'm not mistaken, and that's what's going on as well this Friday. That's why I expect Monday we'll see buying activity again. But who knows? I've been wrong before. I'll be wrong again. And this is my overall view, though, on the markets. Whenever you're looking at a situation like this and you're wondering which one's lying to you, back here when we were moving sideways and people were thinking the market was we're done and they were going to pull back, I told you, whenever you have a situation where you're getting conflicting signals, just default back to the trend. Here you can see the trend is down. So you looking at this move going, which way is it going to go? Default to the trend. Expect it to go down. That's exactly what happened. We're looking at today. You're looking at, should this really be down today? And should the S&P really be down today? Well, the trend is down in the VIX, which means the trend is up. in the S&P. So you've got the VIX going lower. That makes sense because the trend is down. You have the S&P going slightly lower today when the trend is up. That actually doesn't make a lot of sense, but in any event, it's what it is. You now know everything that I know looking at the charts for the week ahead. I hope you enjoy it. I appreciate if you guys refer your friends, share these videos online, and don't forget to visit our free website at perfectstockalert.com. Right now it's actually under construction, so you can't visit it. Ahaha! But I'll have it up shortly, and then you guys can visit, okay? All right, God bless. Take care. Enjoy your weekend. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.